The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 10th, fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, truly, that is what it's all about. So let's go look at one of our tools. This is the tool I call Preparedness is a Step to Success. I hear some knocking at the door. You know, opportunity knocks at the door many more times than people may realize. If the moment of opportunity is not seized, it may be because people just simply don't recognize it, or they're just simply not prepared to seize that opportunity. Now, as an exercise this weekend, maybe even starting today, it is Friday, so this is the beginning of the weekend, ask yourself the following questions. What are you doing to prepare for success? What is it you're doing right now to prepare for success? Think about that for a moment. Have you established and become fully committed to your goals, to your outcomes? Are you willing to go the extra mile and give the energy and the attention that it's going to take when opportunity comes a-rapping at your door? Are you willing to stand firm with your convictions and your principles? Are you prepared to stand alone if necessary? And here's the important question, folks. Have you trained yourself to recognize opportunity when it knocks? I hear a knocking at the door. So let's go find the opportunities in these markets out here. Right now, we've got futures are trading up a bit. We've got the Dow futures up 23 points, trading out at 15,067. S&P futures up 1.5, so flat out there, trading at 1626. NASDAQ futures up 5, trading at 2963. Russell 2000 just up a tad. King dollar on the move. We'll take a look at that. We've got the euro pulling back just slightly right now. The Japanese yen, that's on its way to its own solar system out there. It is a new moon that came in late last night. We do have gold trading down $37 right now, out at $14.31. That's off 2.5%. We've got silver down 60 cents, 2.5%, trading at $23.30. Light sweet crude back $2 right now, trading at $94.47. Looks like that long-term weekly resistance of that descending price channel is going to hold. We've got copper down just a tad. Platinum's off $27 across the pond over in Europe right now. We've got the DAX is up 27, FTSE's up 19. In Asia last night, talk about some rocket ships. The Nikkei up nearly another 3%, up 416 points out there. The Hang Seng up 109 points, about 0.5%. Shanghai up 14, about 0.6% out here. So let's go looking for some opportunity. I do hear some knocking at the door. Now we're going to start off correlations between different instruments are very important. Now, what do I expect? I expect we're still going to see the markets move higher. I think we're going to see the S&P try to make that 1650-ish range, closed out at 1626 out here. Maybe it's not exactly 1650, but should be getting very close to that area. That's where I expect we will see the market put in a top, and a pretty decent top as well. Now, if we take a look at correlations, one of the great, a lot of times people will take a look at the U.S. dollar index and try to correlate that to the markets. Now, what you have to realize is that the U.S. dollar index is really just a basket of currencies. It contains the euro, it contains the yen, it contains the Japanese pound. It contains, let's try that again, the euro, the pound, the yen, the Canadian dollar, the Swiss franc. They make up the primary portion of the weighting structure inside the U.S. dollar index. Well, one of the actual currency pairs, the cross-rate pairs, that correlate great with the S&P 500, I've mentioned this before, so this is perhaps something new to you, not new to you. It's the euro-Japanese yen. And that's what I've got on my screen. If you're watching us on TigerTV, maybe you're listening on the radio or your mobile device at tfn.mobi, thanks so much for doing that. Remember, you can catch the live stream of this show. That means you can watch our charts on your smartphone device, your pad, just by going to the homepage of tfn.com. On the right-hand side, you'll see a button with 3 little smartphones. Click on that. The show will stream live. You'll take a look at my chart. Maybe you'd like to get the HD version, put on those goggles out there, and really be able to see some clarity. If you want that, which you should, just go join the Tiger's Den. You can test drive that for 30 days. The charts inside the den are clear as a bell. I'm not really sure what that means, but they certainly are clear. Now, we're taking a look at the bottom of my chart. Happens to be, that's the red line that you see going across the screen. That is the Euro-Japanese Yen cross rate. What we can see here, and I'm just coming off of the most high, now on the top of the chart is the S&P 500. Happens to show up instead of candlesticks right now, just showing up as a black line as well. Now, we made some highs out here back in the April 2013 time frame. And what we can see is that the Japanese yen is confirming that move, the Euro-Japanese yen, I should say. That cross rate is confirming that move to a higher high. We see right now, even today, if we take a look at the currencies, that currency pair continuing to tick higher, even though we saw a small little downtick yesterday. I expect that what we'll see is this correlation to continue like this. That will go ahead and take us into about the 1650 area. Now, I'm not talking about today. It doesn't have to be today, and I don't really care about the moons, quite frankly, because the lunar strategies out there, they just simply have disconnected from the marketplace, so it doesn't even make sense. In my opinion, doesn't make a whole lot of sense to really be paying too much attention to it, just to, other than to be aware of it being out there. Now, so this suggests to me that prices still move higher. Move higher where? To about that 1650. The primary trading ranges, those are really the boundaries that it seem to contain the price. In the S&P, it runs about 100 points. So 1450, 1550, 1650 out there. So that's what it looks like the S&P 500 wants to do. It's being confirmed by the U.S. dollar, by the Euro-Japanese yen currency pair. Now, we do have the U.S. dollar index moved higher with some conviction, wide-ranging bar. If we take a look at yesterday, having some additional follow-through today out here, what the U.S. dollar index did do is come back to a line that at one point was support, then became resistance. It now is support, and really that was tested here coming back into the trading session on May Day, May 1st out here. So that support level has held. We now have the U.S. dollar index really trying to break this 0.786 Gartley sell pattern. Hasn't done that yet. It's trading inside the swing point of April the 5th out here, April the 4th, I should say. No reason for it to not at least go test those highs, 83.66, 20,000 contracts on that session. Also, the most recent swing point, which has 25,000 contracts. That is from April the 24th, also trading inside there. So far today, 18,000 contracts. So it's got enough volume in here to go ahead and push those highs to test that April 4th level, and that's the key level. 83.66. The U.S. dollar index, if it breaks 83.66, what will happen? Not only will we get that 100% move of a move, which in essence we can say has really occurred thus far, because the July 24th low is 83.76, and we did get a tick up into the 83.66 level. That's close enough for me to make a 100% move of a move. But the top of that range is 84.25. Once you break that, and because we've been dealing in this 0.786 Gartley sell pattern here for quite some time, just like the NDX did. So this area here, when this busts, this tells you that this will turn out to be just like the NDX, which has gone on and yesterday made that 1.272 butterfly pattern. So when a 0.786 Gartley pattern fails, especially one that's being tested for a long period of time, and this here has been really consolidating ever since March 14th, ever since that pattern completed. So now we're talking nearly 2 months out here. When that pattern busts, which it will, when that pattern busts, you'll see a move up to 87.75. Now, here's the key. When we see that move to 87.75, that is going to put a world of hurt into the commodities, because the commodities and the U.S. dollar index, that correlation has not come completely unglued. There have been some times here where we haven't seen much of the move. It looks like gold right now this morning just making up for some of yesterday's move down. Making up for yesterday's move up in the U.S. dollar index, where gold really didn't do a whole lot yesterday. A little bit different story today, as it's off $38 right now. So on the longer-term horizon, what we're taking a look at here is clearly to me that the U.S. dollar index wants to make its way up to the 1.61. Well, it could be the 1.272. If we go measure what that is, might as well give you that number as well. That number would take you up into about 85.75. So you're looking at a range of 85.75 to 87.75 once this 0.786 Gartley pattern here fails. And it looks to me like it will. It will eventually. Now, if we go over and we take a look at gold, take a look and see what gold is doing. We pointed out yesterday it's been traveling in really a sideways trading range ever since the April 25th candle out here. Now, gold still traveling with inside this wide-ranging bar. To me, that's bearish. Now, I'll give you a couple different stories here on gold that we'll take a look at on different time frames and what it may all mean. But gold here had been traveling to that $265 consolidation level. It broke that consolidation level when it closed below $15.35. All you have to do for the price projection is take 265 off 15.35, and that's going to give you the approximate area where gold, in fact, should bottom. Now, it's going to make a decent bottom here. And it could be in the process here right now. But when I take a look at what's going on inside the U.S. dollar index, what's going on with regard to that Gartley pattern that's out there, the 0.786, and knowing that that turns into a butterfly once that area is pierced out there with some type of conviction, it at least says gold wants to go down and test the lows, and those lows could be 13.2150 out here. If in fact that holds, and I say okay, that's the bottom, and forget Steve's 265-point consolidation, which I believe takes you down to about 1270 out there. I'm not going to quibble in gold and something trading, that's traded as high as $1,800. I'm not going to quibble over $50 in the contract. But if we take a look at the consolidation here right now, if we close today below 1426. Now it could do this intraday in a heartbeat, but it's been traveling into 50-point consolidation. You break this consolidation, you can just simply take $50 off 1426, and that's about 1375, and that's where gold would travel to. Now, what's at 1375? I'm not sure. Let's go find out. Let's just take a look at our retracement ruler. Let's take a look. Well, 1384, you got the sweet 618 retracement. That's just simply coming off of the lows to the high that was put in here on May 6th out there. So that would be nothing more than a normal move. We come back, we'll take a look at the weekly chart. The weekly chart says that the commitment of traders, that absolutely people are expecting a bottom to be placed in gold. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go ahead and continue our conversation here, or my conversation with you about gold. Right now it's trading out at $14.29, down $39. Now, what I've switched over to is a weekly chart. If you're watching us on Tiger TV, you're going to see this chart here is broken into really three different sections. The top section here is price, obviously. The middle section is the gold, the commitment of traders, commercials, net short position as a percentage of their open interest. Now, this is, I did not go ahead and update it from last week's data. I looked at last week's data, didn't see any significant change either in the commercials percentage of open interest or the group called the non-reportables. Now, the non-reportables, it's a group of traders that basically is a group of individuals so insignificant that, you know, they're not even classified when it comes to the CFTC. Now, this data is put out. You have access to it. It's put out every Friday, so it'll be out today by, I believe it's 3 or 3:30. I don't really pay attention to it until the weekend, when I go ahead and look at it, sometimes update reports out here. And it's really important. I think it's important to take a look at both of those groups of traders out here. The commercials really being the large money entities, and they are the ones, they're kind of like the big, huge ship. You know, they're like these big, huge Royal Caribbean cruise line ships that are out there. And as you can imagine, making a turn in one of those big ships, it takes a little bit of time. So they're willing, they're committed to their outcome, and they're willing to start taking positions and build that position over a period of time. The individual traders, that's something to pay attention to, because when they get on the wrong side of the boat, usually the boat capsizes here. Now, let's go first and take a look at the upper portion of the chart. And 1270-ish is the 265-point consolidation range. That would be fulfilled right around the 1270-ish. Just below that area is a swing point that truly sticks out. That is December the 4th, 2009. That high, 1227 out there. So really, if we see a continuation pattern inside gold to the downside, what you should look for is about 1220 to 1270-ish. That's what we should be looking for. When the bulls run in, we'll be able to see that clearly. On the weekly chart, no way have the bulls run in here. And here we take a look at the body of the candle, truly the essence of price. This is why you need to, no matter what time frames you trade on, you've got to at least go up one or two levels just to get an idea of what's really happening. And the body of a candle is truly the essence of price, and that's why we pay attention to this high volume low, not just like a little high volume low, massive high volume low from April the 19th out there. And if we take a look at the body, the top of that body is the open, 1481, and here's what you really want to be paying attention to is the close of that body, 1407. We're trading at 1428 right now. A close below 1407, that becomes, in my book, a continuation pattern to the downside. You see, as long as you trade with inside that body, you're not getting, it's nothing more than a sideways move. And you're not doing anything other than, in essence, really working off either an overbought or an oversold condition out here. So knowing that we've broken a consolidation, knowing that we have a high volume low on the weekly chart, at a minimum, 1321.50 should get tagged at some point in time. Now, what does the commitment of traders data show? It shows that the commitment of traders from the commercial standpoint are truly at their lowest net short position than they've been at, going all the way back to 2008, to the lows back out there, to the lows back in 2007, in June of 2007, when gold was around the 650 mark. And on the other side of that boat, the individual traders, which we'll call the non-reportable group, they're at the highest net short interest that they have ever been in. And that, folks, that says that the individual traders are usually the smaller traders, are the ones that end up getting it wrong more often than not. They stay at the party too long out here. So all of this, when we take a look at the CFTC data, this says that gold is going to be putting in a bottom out here. But until you break the body of this candle on a weekly basis, I'm not convinced that gold has put in the bottom yet. And likewise, with it just traveling sideways, not a whole lot of information. Not enough information out here, in my opinion, to be taken at least a long-term. Trading it, that's a different story. Trading it, going to intraday charts, 30-minute charts, things of that sort, just taking like a Gartley's, butterflies, whatever trading system it is that you might use. That's a whole different story out here. So that is my overall take on the daily chart with regard to gold, with regard to the dollar and putting it together on the dollar, and then taking a look at what is going on here on the weekly basis. What you and I really want is we want to see that big down thrust. We want to see gold absolutely get trashed out here because we know what the big dogs are doing, and they're not getting net short. They're getting more net long, if you will, than they are. Less net short is really the way to take a look at it than they have since the lows back in 2008. And so nobody's going to want to buy it except for all of us tigers and tigresses. We're going to want to go ahead and back up the truck. But I think right now is just a bit too early. When we get back, we'll go see how this market is going to pop here, or if it's going to drop. Moving in the market here right now, you've got Gap. That is to the upside. Molycorp to the upside. And Pain Therapeutics, PTIE, going to experience a ton of pain this morning. Going to get a 50% haircut when we open up. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 18 points, trading out at almost 15,099. S&P up 2 1/4. Trading out at 1629. Composite up 8 points, trading at 34.16. Russell 2000, the leader in the clubhouse. Bio is up $2, up to about 0.22% out here at 968. Google's up $3. Apple is up 2. Microsoft down 22 ticks. Leading the charge, the upside, Priceline.com. PCLN is the ticker symbol. They were out with numbers. They did total revenues of $1.3 billion versus $1.04 out there. And they are leading the charge to the upside, up 2.5%. You've got Ubiquity Networks, UBNT, up 355. That is up 22% out there, so they are having a nice morning out here. Let me see, what did they report? What were their revenues? Earnings per share of 23 cents versus 30 cents a year ago. That's not what would make the stock move. But it is moving to the upside. Solar City up 6%. SCTY is the ticker symbol. I don't see any news behind it. Toyota Motor Corp, they are up $1.66, up 1 4/10% out there. To the downside, EV Energy Partners, EVEP, off 8% here. You've got the Pain Therapeutics. We're going to take a look at that stock chart and talk about a psycho stock chart here. They're down 47% right now. That's off $2.55. We've got AutoNation. That is moving down. That is off 16%. Auto Nav. I'm sorry, maybe it's not. That's not Auto Nation. Would be AN. This is Auto Navi Holdings, AMAP. They're down 15% this morning. Panel Universal Display, PANL is a ticker symbol. They were out with numbers. They reported revenues of $14.9 billion versus $12.62, and the net loss of looks like $4.8 million versus $1.2 from a year ago, and they are struggling this morning. Green Mountain Coffee Roasters down a bit here off $1.49. Our calling number is 877-76648. We'll take a look at Molly Corp as well. Used to be one of those equities that we had paid attention to. They were out with revenues. I believe that stock was jumping in the pre-market. But let's start by taking a look at Pain Therapeutics, just totally getting cut in half here. And as we take a look at this, we saw a huge downdraft in this equity, 3 million shares to the downside on November 1st. That gets down to a price of $288, makes a little bit lower low with another little gap down prior to December 14th, not with big volume or anything, but gets down to about $2.34. Then we see a little sign of strength in here. Sign of strength was smaller than the sign of weakness. This took place here on April 30th, 2013. Goes from a low of 306 all the way up to 460 during that one trading session out here. Now, this is not buying a breakout as this thing pulls back. Make sure you always go further back on the left-hand side of the chart. As I pull this back here, you're going to see some real pain inside this equity. Look at that pain. You want to talk about some volume. June 24th, 2011, 9.7 million shares as it went from, in essence, $9.55 all the way down on that one trading session to about $4.91. It had further to go with another gap down and even more shares as it moved down to the low of 328 out here. So this thing is what a wild stock chart this is. Now, of course, with doing 3 million shares at $2 or $3, it's not a big deal. It's not a lot of money. So you can see that some bulls and bears are pushing this thing around, and they're easily able to do that. That is on Pain Therapeutics. Let's go take a look at some of these other stock charts here that are moving and grooving. Then we'll go over and take a look at the currency marketplace. So let's take a look here at the NVIDIA. NVIDIA out with numbers. They are up this morning. Let me see if I can find out what their numbers actually were. NVDA is the ticker symbol. They generated about $78 million in net income versus $60 from the prior year, so not bad there. And revenues look like the revenue number was $954 versus $924 from the year earlier. So they're gapping up here this morning. Volume behind the move, 2.2 million shares. That is going to go ahead and tag. Well, how about that? It's got a high volume high out here. NVIDIA. If you go back and take a look at the high volume high, it's got two of them. Oh, how about this? NVIDIA, we should have been paying attention to this, my friends. NVIDIA right here has a high volume high that it's going to be tagging, or it's already tagging today, and that is August 10th, 2012. 31 million shares to the upside as it was making a downside move. Doing that here back on the 16th of November, was doing that with 15 million shares, which was going against a candle that had 34 million shares. So it was going against a higher volume low with lighter volume. That was the test of that high volume low out there, knowing that it's got high volume highs. That is a beautiful thing, and this is just the daily chart that we're looking at. So it looks like what NVIDIA has done here. Let's take a look at possible A to B equals CD patterns on this little puppy here. The A point is going to be the low that we were talking about, which was back on November 16th. That's your A point. That price is $11.15. Your high, your B point out here, is going to be January 4th, and that was $13.19. Makes a retracement here. Looks like that retracement looks like I grabbed the wrong one, so let's redraw our A to B equals CD. Let's do this thing accurately. So we had our A point right and our B point. The C point is actually going to be the low here on January 15th as it gets out to 11.91 out there. So already today gapping up into the 1 to 1.272. It completed the 1-to-1 move here. It actually did that on May the 3rd, then just simply traveled sideways for 4 or 5 trading sessions. And let me just refresh my screen now and make sure I've got all accurate data out here. Candle from the 8th and the 9th looks almost exactly the same out here. So this is going to make its run up to 1521. That's going to be the high of that high volume high from August the 10th out there. Its actual number is the 1522 on August 10th. 1521 happens to be your 1 to 1.618 A to B equals CD. No reason to rush in on this. We can see here it's moving towards the overbought to condition. Take a look at that RSI. But this is one that you'd want to go ahead and perhaps put on your stock charts to try to buy on a pullback here. Why? Because you've got a nice high-volume bar here on February 16th. This says that it wants to move up into the 1690 range out there. The low of that is 1570, so it's going to get inside there as it tests the August 10th area, and then just wait for a pullback. Looks like so far a pretty decent move here, and this is on NVIDIA. Let's put this on a weekly chart, just see if anything sticks out for us. Of course, I have some hammers there identified, so certainly I had. This thing's really just been consolidating here for quite some period of time. Let's draw this little. Just use this little tool, and we'll take a look at the consolidation range inside NVIDIA, because if we get a break here, get a break of the high from August 10th at 1522. So we use $15 as the top side of the range. We use 11, so it's a $4 range. So $15 is going to take you up to 19, and 19 will take you all the way pretty close to, we'll take you into the June 3rd high out here. And this does not, doesn't have on the weekly chart no volume off the highs or anything, so really not a bad stock chart to be paying attention to. I would be watching NVIDIA. NVDA is their ticker symbol. Let's go take a look at Molycorp MCP just for the heck of it, see what it has been doing out here. Molycorp gapping up just slightly here this morning, trading out right now at 626. They know they were out with numbers here before the bell, or maybe it was after the bell last night. Let's see here, what do they report? If I can locate it. They did revenue of $146 million. I just don't see what that is going against. Nonetheless, let's take a look at it as it's trying to take out a B point of an A to B equals CD. Now, Molycorp here, MCP again, folks, that is the ticker symbol that we are looking at. This made a low back here. Give me a second here. I want to type something in. Made a low right back here on April 17th. With a price point of 470, volume of about 6.1 million shares out there. It happens to be a little hammer. Maybe I'll blow this up a bit and you can see that. So makes a hammer. Actually gave you a buy signal right then and there, and then it was followed up with a bullish engulfing candle on that next trading session, just simply because of some divergence that was in the marketplace, plus being down towards that oversold territory. Now, if we take a look at possible A to B equals CD pattern here on Molycorp, what we would look at is 695, 732, 780. Looks like 780 would more likely be the mark on this. The B point, let's just take a look at the volume that it needs to get through in order to do that and see where we're at today's trading session. So the B point I'm using here is May 2nd. The volume there, only 7 million shares. Let's take a look at today's trading so far. It's going to have the volume to do it because today's already 5 million shares. So Molycorp is going to be on its way up into the 695. What's it going to? We're at 695. It's going to run into some turbulence for sure. You had a big volume day. That was January 25th. Let's just put a black line across the screen here. Should run into turbulence as it actually gets up into that level. I suspect it will actually go ahead and try to move up to the top of that bar, which is 808. Just simply the retracement here on our B to C leg was very light. So you can see you got the bull showing up here. That's what you really want to see when you're trading down towards the lower range. That's one of the things you want to see when you're trading down towards the lower range of that relative strength indicator out there. And likely the opposite is true on the top side. So looks like Molycorp, but just a trade, really just a trade. No big signs of strength or anything like that off of the bottom here, but did give you some signals most definitely, and it's following through on that. That was on MCP. True Religion, they were out with numbers as well. TRLG is their ticker symbol. So let's go take a look at True Religion. I don't know that I've got it on here, but let's just have a spiritual moment here. TRLG is the ticker symbol, and I need to refresh my screen here. What's the deal here? That candle can't be right. April 10th, April 9th. How's it possible that candle looks exactly the same? Let's see, is it trading? Maybe it's halted or something, or I've got a bad data feed on it. So we're going to skip True Religion right now, at least during this segment, because that ain't right what I'm looking at. I can see that for sure. Make sure all systems are go here. Yeah, my systems are working just fine. So let's move on. How about let's take a look at Hecla. HL is the ticker symbol. They were out with numbers as well here before the bell. Let's see what Hecla was reporting out here. They generated revenues of net sales, $76 million versus $91 million from the prior year, and I don't see a net income number. Trading down this morning, let's take a look at the volume inside this. So far, 1.1 million shares as it goes ahead, and it's going to make its run for the swing point of April the 18th. That high is 310. It's at 320 right now, and that only has 9 million shares. This already has 1.1 in only 6 minutes of trading here. So it looks like on Hecla, you're going to see a test of the low, which is going to be $2.95 out there. Let's go see what else do we have out here with numbers. Give me well, let's take a look at what's moving and grooving here in the marketplace. We've got EV Energy Partners. That is off 8% and almost 9% this morning. So let's go check them out, see what they are doing. That ticker symbol is EVEP, and so it has a gap down this morning. And it looks like it's got some pretty decent volume. This is a nasty-looking stock chart, at least the portion that we've got up on the screen here. And so it's now trying to take a look at this high-volume low that it is testing. That is May the 3rd out here. You know, so that's just really the correlation of when we took a look at the gold chart. We took a look at the weekly chart on gold. We took a look at that high-volume bar out there. Gold right now is off $40. You got silver's down 62 cents out there. So just be patient on the longer-term gold trade out here. Right now, as we take a look at EVEP, EV Energy Partners here, this thing here, if it takes out the low, let's try to figure out where this might go, and we're going to do that by going and taking a look at a little bit longer-term picture. First, we'll do that. We'll do the weekly. We'll take a look at what the weekly A to B equals CD down. Maybe it's actually, no, it's not completing it. Not a chance here. But let's take a look at the actual A to B equals CD. We're going to use as our A point the highs from November 4th, 2011, 77.96. Our B point is going to be this bullish engulfing candle down here on June 29th. That low was 43.56, all the way up to the high put in on November the 2nd, 66.30. The 1-to-1 A to B equals CD, $31.90. If we take a look at retracement level, what was that B to C retracement? Of course, sweet 618. You want to make sure you're using that in all of your trading out there. It works more often than not. As we take a look at the high volume bar out here inside on the weekly basis, inside EVEP, well, that takes you right here to 29.82. That's the high. That's the high volume bar. And the 1-to-1 A to B equals CD, 31.88. That is where that equity is heading to. Let's go check out some of the currency pairs out here. Let's take a look at the euro, see what the queen here is doing. We'll look at the 30-minute chart out here, and the queen has put in, it's made its move. And it's made its move. We took a look at the Gartley cell pattern, a beautiful Gartley cell pattern that formed out here at 12 noon on May the 8th. We got a confirmation of that Gartley cell pattern that came in right here at 1 o'clock in the afternoon. That then a full completion of this. I went ahead and took my bread off the table as it got down to the 618 retracement level. That was yesterday morning when we were on the show out here. We then had some real follow through the downside, I guess, when that Wall Street Journal report came out at about 2:30 in the afternoon. Now, what the euro has done and what a Gartley pattern can do is set up the C point, in this case here, of an A to B equals CD down. That completed this morning in the 1.2986 level. 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 15 points right now. The S&P is flat. Composite up 11. Russell 2000 up $1.80. I've got the 30-minute chart here of the NASDAQ futures up on the screen here. And it looks to me like the lows for the day were put in as we were coming into this at 9:30 time frame. This is the bar from 9:30 to 10 a.m. What we saw inside the NASDAQ futures actually got down and tested the bottom of its rising price channel. That rising price channel being established and starting back on April the 18th out here, right around the close of about 27.29. That's really the body of that candle. We see how it actually moved down here without actually even getting to the oversold territory. We've seen a fairly nice bounce here so far this morning. So as long as this rising price channel doesn't get pierced here, that would be a positive. That would be bullish here for the market. If we were to take a look at the other rising price channels in the other ETFs out here, all we're seeing inside the Dow, we saw the Dow here actually get back inside its rising price channel coming off of that same April 18th area out here. We can see right now the Dow itself is getting towards that sold territory on the RSI. She's down at around 33.30 out here. So we should be seeing here, could be a little bit more pressure here inside the Dow, but that the move to the downside inside the Dow on the intraday chart here should be over within the next hour, I would say. If we take a look at the ES Mini itself, the ES Mini is neither overbought nor oversold, and it's really at the mid-stroke level of the rising price channel that it was traveling in. And then we go take a look at the actual Queen itself, the Queen Bee. We started off taking a look at that, and the great thing about a Gartley pattern is what the ultimate of the pattern is to form the new A to B equals CD down. So if we take a look at that, the longer-term picture of the A to B equals CD down is the A point that started here back at about the 8:30 time frame, out at 1.3241. That was your A point. Your B point and ended up being now the 9 o'clock session down at 1.3034. That was 9 o'clock on May the 3rd. The C point was where we had the Gartley sell pattern. That was at 12 noon, right at 1.3183 out there. The ultimate outcome of a Gartley pattern is when it forms an A to B equals CD down. Typically, you start taking a look at these patterns will typically make the 0.618 retracement, maybe 0.786. It made that 0.618 retracement, got into the went into the oversold territory. That's why I went ahead and closed out my position on that. We started to see a little bit of a bounce and some bearish candle sticks forming out there, and then those things gave way, and went ahead and set up that new A to B equals CD down. Now, as the A to B equals CD down has formed here, we have seen the bulls try to rush in here, so maybe it's Super Mario, or maybe it's Uncle Ben and a team out here. So the euro has completed its pattern. It has formed some bullish candles, and that says that the move down on the euro, and that was all being done as it was getting into oversold territory. I see a nice divergent pattern out here. That would say, okay, good reward to risk to actually go ahead and take a short-term long position inside the euro. If you were taking a look at if you just really, the ultimate outcome would be taking a look at that C to D leg, and you ought to at least get a bounce up into 1.30594. That is the dead cat bounce, but more likely up towards the top when it started falling yesterday, really cascading around 230, somewhere around 1.311 or so out there. So that is on the so that's taking a look at the futures. That's taking a look at what's going on inside the currency market, and those are painting the picture that the market just simply wants to bounce from here. We took a look when we began the show, taking a look at the euro, Japanese yen currency pair. That too says that wants some higher price. Folks, stay tuned for the Nadex hour, and if you're off to start your Friday, have a fantastic weekend, and always remember you have an amazing power within yourself, and that power is so strong it'll create a life of abundance, build billion-dollar businesses, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Friday, a great weekend, folks. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.